Hi, I'm Jessica Hallenbeck with Signature Real Estate Group, and we're going to talk today about some questions in the real estate world, and this is...
Hi everyone, I'm Shelly Panzarella with Prosperity Lending.
Why do we have this buyer frenzy right now in the real estate market, and what is causing that in this COVID era? What do you think?
So I think a lot of it is the lower interest rates, right? We've been in a really low rate environment, and it's kind of, I mean, just from a housing affordability standpoint, even though prices have been increasing, it's still very affordable compared to what it was a year ago, or pre-COVID, I guess we would call it. And so I think that's kind of spurred a lot of interest in it, and I think people are starting to return back into work and everything since the shutdown, and so that's also helped to get people kind of back and motivated into buying.
Absolutely, I couldn't agree more. I definitely think it's interest rate driven. I also think that people are finding more just satisfaction with their home environment.
True.
And we have that our homes are our sanctuary, and so there's a desire to have a nice place. And so I've seen that. I've also seen people downsizing and realizing that maybe the kids have moved out and they haven't downsized in a while, or thought of those things.
I think it's also on the flip side, right? People have been in their homes for many months now, and so they're starting to get a little bit of growing pains. And I think the reality of being home more often is probably more now than it ever was. And so people are needing extra office space, maybe for homeschooling, or I know a lot of kids are going back to school, but just the office space in general, and then just bigger rooms, right? Because everybody's hanging out inside of their homes today. So,
well, I did it. I moved.
That's right. Yeah, that's right.
And then there's also the idea that we do have some people that are coming off of forbearance and they've gotten their jobs back, and maybe they just want to put themselves in a little bit more economic situation, so that they're not house poor. Maybe that's not the right word, but just in general, making sure that they can maintain their budget. So I've seen a few of those cases
where they're downsizing to meet that.
Yes.
I would agree too. I think it's helped because with the low rate environment, it's also helped them to realize that they can maybe afford similar payments, or to your point, conserving their payments and getting into a much more affordable situation.
Absolutely.
Than what they were in before.
And another thing is the refinance. So obviously a couple years ago we had higher interest rates, and then we've seen the interest rates drop, but some people are not refinancing, they're going into changing out their housing versus refinancing. Why do you think few people are doing that versus refinance?
Why are they doing moving into newer homes?
Yes.
Well, I mean, I have a client who actually weighed the differences between the two, and what they saw is they could get into a newer home, not necessarily bigger home, better community, for the exact same price. And so for them, it was kind of a win-win, right? They're going to get a lower interest rate, so their interest over time was going to be better, and they're going to be getting into a newer, I don't think it was even a bigger home, better location, and a newer built home. And so that was definitely their motivation for doing that instead of refinancing. Yeah. So I think for each person, because we've been on both sides. We've been able to help a lot of people through the refinancing, just a straight rate and term refinance, and they've been able to save hundreds of dollars just by refinancing. But then we've also helped clients refinance and pull a little bit of cash out for multiple reasons, which I thought was unique. I mean, I've had several pull cash out not just because of home improvement, but because they want to kind of use that in the stock market, or they've got other investment opportunities. And so it was, where you think a lot of people would be nervous about this time they actually were a little bit more on the proactive and aggressive side, I guess you could say. I don't know if aggressive is the right word, but
motivated.
That's a great word. Yes, motivated to take advantage of it, especially because it's a once in a lifetime for me. Been in the industry for a long time, and to be this low is great. So
I think that we're finding security in housing more than ever. It's a very different time in this past recession, which we're now getting out of, that it's not housing related. It is because of COVID. It's not the same as the last recession. So very different. And I can see that also inflation, so home prices are going up, but interest rates are low. So it's almost like having the same payment.
Yeah.
You know.
For sure, that's, yeah. So, and I love, because we've always had these conversations, you talk about the stability of a mortgage versus, you know, a renting or whatever the case may be, and knowing that you are secure in this payment, right? Property taxes may change and homeowners insurance may change, but where the rate environment is, how, you know, you're locking yourself into that payment for 30 years plus, right, as long as you live in the home. So.
I actually have an investor client who they own like 3 investment homes in a 55 and older community, and they're selling them. They're at a point in their life where they're ready to liquidate those assets, and there are tenants that are in these properties, and one of them, you know, was pretty devastated to know that she was going to have to move. Her lease was up, and it just was that time. And so it's kind of a sad thing because I'm calling to help her find a new place. But that's the lack of security. You know, she doesn't have any control over that situation. So I do think it's really beneficial for people to buy a home today. For that reason.
So are you helping her find a home, or are you going to help her find
right now we're just seeing what
the market looks like?
So she's not quite ready to talk much. I think she's still in shock right now. But I will help her with, if she can purchase, which I will tell her the benefits. But if she can, then we'll definitely work on that together. And if not, then I'll help her find a rental replacement, because obviously I don't want her to be homeless. That would not be good.
Well, and so for your client who had the rentals, was that just their strategy was to hold on to the rentals and then at some point, I don't know if you call it cash out on them, or what would that be? So they
met with their CPA and decided that they wanted to go ahead and liquidate those assets. Because whenever they asked me about it, I mentioned you should probably talk to your CPA because these are investment properties. But they were okay with that. They know exactly what they're doing, what they're getting into, and you know, they're just at retirement age. So for them, it was just what they chose to do. I don't think we're going to see a ton of investors do this. Mostly, they are kind of that mom and pop investor. So I would say that, you know, this is a good time for them. But do I think we're going to see a whole bunch of inventory come from this kind of situation? Not really.
Yeah, I mean, I think it's smart, though, to think about just strategy plays in purchasing homes and building wealth through home ownership. Not just the security aspect of it if it is your primary residence, but the ability for you to have multiple investment properties and what you can do with that as you've gotten to that, you know, retirement age, you know, and then now you can liquidate them, and that's your kind of forced savings, so to speak, right, or forced retirement asset that you have. And I don't think, I think people also, they don't see that opportunity for home ownership as well. Not just their primary, but also for the investment side of it too. With the rates being low as well, not to circle rates back in there, but it makes the return on investment also lower or higher, greater, because the rates are lower today.
If you would have asked me about investors purchasing properties just 6 months ago, it wasn't that many people doing it. But the last 3 listings I've had have all been cash offers, and 2 of them have been investors. So it's from out of state. So it's really interesting what's happening in our market, because kind of going back to what we just mentioned, it is a place to put cash. So we're seeing people with the prices being at an all-time high, they're still investing. And I wouldn't have said that would be the buyer. I would have thought it would be different. And now we're seeing that. So that's pretty interesting.
And I think just speaking to the market itself, just because I think there's still a lot of confidence in the market today. You know, with everything going on, you still are. I mean, we were the busiest that we've been last year, right, in 2020, and it hasn't really slowed down. And so that's just a great indication that the market is still. There's a lot of confidence in the market today, not just Vegas, but across the country.
I think there's 2 things to kind of mention here. It's obviously there is some inflation happening, but in markets that have high supply and demand, it's not just inflation, it's actually true appreciation, because the demand is there. So we're really seeing our prices go up, and it's a little too fast at times, but it's warranted right now.
Yeah, and I think, I mean, speaking to, you know, everybody seems to think that there's this like imaginary bubble that's out there. What are your thoughts around that? And
I think you'll always see corrections,
Yeah.
but I don't anticipate anything changing over the next year at least, probably a couple years. And the reason behind it would take something. I mean, it would take something dramatic, but the fact that the interest rates are so low, payments are affordable, so many people have equity in their homes, that's the saving grace right here. You know, if, you know, the majority of homeowners have, I don't remember what the number is, but I just read that like literally 50% equity in their homes. I mean, it's a lot of money. And so some people are leveraging that money out and using it to build portfolios or invest in other things. So what is the right thing? I think all of those things are great answers. I truly believe that home ownership is a wealth building tool.
Yeah.
And I've seen it for myself and my family that, you know, we've always owned a home, and except for one time that I didn't own a home was when I moved to Vegas in 2006, height of the market. And I waited.
Good for you. That's smart timing on it.
That was actually good timing.
Yeah.
But of course, the opportunity came, and I've owned a home ever since, and move, and it's always been a good decision.
Yeah. So you were here when the height of the market before the housing crisis then, right? So what do you see to be the difference from then and today? Because everybody likes to say it's the same, you know, that we're in that same kind of environment.
No, because we don't lend the way that we lended there, you know. So I actually had a 6-month little bit in a mortgage industry in 2007. So that was the height of the market. And it didn't last very long because one, it was weird. It almost felt like it was this encouragement of, yes, let's cash out all your equity, go pay off all your bills, go buy your toys, or whatever people were doing. And then everyone was upside down because they over leveraged, you know, and couldn't afford that payment without multiple people living in the same home, or, you know, obviously just stated income, like, which it just didn't make any sense. So that's not what's happening today. So it's really hard to compare it. You know?
Yeah. I mean, living in that world from a lending standpoint, I mean, we were doing the interest only, like the 1% pick a payment loans. And I remember you'd have like one client purchasing in one new home community. They'd buy 4 properties because they knew next phase that they would ultimately be able to, you know, sell them ultimately and get some of the appreciation just within a phasing, or even when the community sold out. And then I think it just kind of caught them because things just, you know, there's an oversupply of property at the time. Plus, then they had the homes and they were interest only, and then they converted at some point, and it put them in a totally different environment.
Right. Going on that for just a second, why were we so oversupplied in comparison to today where we're so undersupplied?
So I was reading something on that. So, and I always get this mixed up. So Gen X would be like my era, would that be? Okay, so Gen X. Then there's the millennials, right? Okay, so the Gen X, we didn't procreate, I guess, enough, and so the millennials did, and so they're now in this age group where they are now wanting to buy. But because there's so many millennials today that are out there encouraged to purchase, I think it was like 7 million. More millennials than there were Gen X during the same age time frame, right? And so at the same time, there's 3 million less homes that were being built. Back in the days, and I used to work with the builders during that time, and one specific builder, we were building, the goal was to build 10,000 homes that year. I mean, what do we close this year in just in traditional resale? I don't, you know, that was one builder. And there's top 4, there's your top 4s were doing the same exact thing. So imagine all that inventory coming into the market in addition to traditional sales. You know, and so it was an oversupply of homes.
I mean, we only pull permits for about a 4th or a 3rd of what was happening at that time, you know, today.
Great indication.
So we're definitely not keeping up with the demand. But there's reasons for that. Like, for instance, all of the commodities, the lumber, the L's, right? The lumber, the land, everything costs more. There's a lumber shortage, apparently, which has made lumber prices go up. And it's predicted that they will continue to go up because lumber takes a long time to make. Okay, so you have, I mean, there's lumber fields, and and they just do not have enough lumber to make the demand for years to come. So I think we're going to see issues with that. So the replenish of inventory, where is it going to come from? Well, investors that bought back in the heyday are not going to sell those houses that they have all this equity in.
Yeah.
So I don't know. It seems really interesting. That's why I don't see a crash coming.
No, yeah, I would agree with you on that. One, because of the way the lending was done then, and then two, just based on demand. Even as we talk through like forbearances, I know we're going to chat a little bit about that too. Everybody feels like there's going to be this gap or window when all of these forbearances are going to flood the market, and you're going to have a ton of foreclosures and whatever the case may be. But I don't see that to be the case. Do you?
As long as the government steps in and allows people to not end up in a situation, like allowing a modification of their loan, the forbearance. Most of the programs are allowing those payments to go to the back of the loan, and they're not even charging interest to that. So it's really not bad for that homeowner. But what could be bad is if they go on to the next stage in their life and forbearance period ends and they can't keep up with the normal payment. Yeah, that's where they could put themselves in jeopardy. Like, if you start missing one payment, it's a slippery slope of messing your credit up, jeopardizing your ability to purchase a home in the future. So if anyone is in a predicament like that, they need to consult a realtor or their lender or someone to help them make sure that they don't end up in a situation like that.
And I think that's a great point, because I think when it first rolled out, everybody was like, forbearance is free money, nothing happened. You just sign here and you're pretty much done. As I've talked to some of those clients who are now who are trying to refinance, we had to wait a specific time frame for them to actually get caught, to come to make their payments for their forbearance agreements, because you do have an actual agreement, which I don't think people realize. They're just kind of like, sign me up, I don't have to make a payment for however long, and that's the end of it. But there is an actual agreement that you come to terms with your servicer or your bank, and they do provide you with the documentation. Because of the CARES Act, there's been multiple extensions on that. I think right now they're up to, most of them are at 12 months, and then I think they're going to give like 2 additional quarters, so an extra 6 months that most servicers will allow. But there will be a time when we're going to get back to normalcy, and they're going to be expecting a form of an arrangement or agreement to be done. And to your point, most of it will be where it's deferred, put towards the tail end, like a modification. But they will have to come. You'll have to make your payment at some point. If you're not doing it today. And so I think people who are in that position, they have to be aware of that, speaking to the servicers. But then also, if you're in a position where you may not be able to whether it's unemployment, whether it's your financial situation, you're unable to make it work, you definitely need to consult with a realtor or somebody who can kind of help you through that, because more than likely you have equity. Right? And you're in a position where you could sell. Before, you didn't have equity, back in the days in the housing crisis. And so now I feel like you're in a good position. And so to look at it today would be a good idea, if you know that this might be something that may be looming in the near future.
Absolutely. It would almost be the strategic planning of how to protect the equity. Correct. Even if it is as a pause in home ownership for a moment, you could then reposition yourself to get to the income level you were at, and then get right back into buying another home. Obviously, that we want to prevent that. So selling and renting would be like a last resort. Yeah. But maybe selling and then finding something more affordable. And then also, people who were in deferment, they didn't have the opportunity to refinance. Correct? Yeah, okay.
Yeah, well, you could, if you did refinance, we'd have to take them through a period of them making their payments for 3 months. So you could refinance them, but they'd have to make those payments, right? The current payments that they have today, and then we'd put them in a position to refinance them to the lower payment with the lower interest rate.
And that 3-month period just kind of came into play. That wasn't necessarily this past year.
That's right.
Okay.
Yeah, and even I looked at some of the information as to like, what does it look like to return back if you do happen to if you have to sell after a forbearance. So a couple of the investors require you to make the 3 payments. So if you are in a position where you can't, and you know that the only alternative is to sell, 2 investors require you to wait a year, basically, to kind of return back into the market to purchase again.
Wow.
One of them will allow you to do it, but you have to be in the middle of your forbearance, meaning like, if we all know we've got a year plus 2 extensions, so let's say it's 18 months,
right.
You can't be on the 17th month ready to try to sell, because you'll more than likely be past the forbearance time frame, and then in that particular case you got to wait another year rather
right.
than move from the forbearance into an actual purchase. So
right.
I think that's again just educating, you
right.
know, and making sure that you're speaking to the right people to help you through that process if you need to.
Yeah, because it's definitely timing. You
For
could,
sure.
I mean, you could time things perfectly, which would be most ideal. Protect your credit and your equity
Yeah.
to the fullest.
Yeah, I think that is the one difference from the housing crisis of 2008 and today. I think it took us. Everybody says it was like within 8 days there was assistance, right, for the for us today with the foreclosure or forbearances. In the past, it was like 18 months before they realized, hey, we need to help our homeowners out. You know, in the meantime, everybody was going late because that was the only time a bank would ever talk to you.
Right.
But here, you literally pick up the phone, and they're ultimately like, okay, if you're having hardship,
right.
we'll go ahead and put you into a forbearance immediately.
That's an excellent point. So, in order to get any kind of modification, you had to be in default.
That's right. Yeah.
Which put people who wouldn't have done it. They did it because they tried to restructure. Yeah. Their loan because they were underwater. Unlike now where they're not underwater, but they may need to restructure, a lot more cooperation
For
now
sure.
than there ever was before. And I think, you know, in general, we all learn from the mistakes of the past. And I don't think the government or any of the companies and just in general are not interested in the same things happening. We don't want to see this wave of foreclosure.
Yeah.
It's not good for anyone.
Yeah. And I think foreclosures, and you know this more than I do, foreclosures and short sales it's part of our industry, right? The magnitude of what we saw before is not part of the industry, but like even today, there's foreclosures. They're just not, you know, in the thousands, right? But they're like part of our normal industry in real estate is to have some form of foreclosures, just for whatever reasons, not necessarily, usually financial hardship, but not necessarily because of a housing or pandemic situation. So
just normal things that can happen.
Yeah,
you know.
market, yeah.
Or
life.
Exactly.
More than anything. Yeah,
exactly. You know, not all good things, but but you know, so we ultimately we are here for our clients to make sure that we're able to explain different things, scenarios, come up with plan A, B, C, D, in order to make sure that you get through whatever situation, or if you're just looking to change, you know, you want to change in your home setting or just, you know, the best thing to do is have someone work with you. Because then you have someone to bounce ideas off of and come up with all these plans. And what I've noticed is that it almost seems that I'll have a conversation with someone and nothing's going to happen tomorrow, but all of a sudden, and we stay in touch, of course, but all of a sudden, 2-3 months, it's like, I'm ready. You know, it's like real fast. Everything then just kind of happens, but there's this planning of the mind first.
That's right.
You know, we all, you know, there's you know, you actually do it, but you always plan it. And so either you know you're doing it and you do it consciously, or you're doing it, but no matter what, you have to come up with your plan.
Not only that, I mean, there are like friends and family, right? I think also maybe you're not experiencing this, but other people you're hearing are, knowing that there are definitely some great professionals and advisors out here and realtors and lenders who are going to be able to help your friends and family walk through that as well. Just know that we're here for them as well, right? And sometimes I think that the hardest part is hearing somebody actually going through this, but knowing that there are definitely some opportunities and options for them.
That's right. Yeah. Well, we're here for everyone we know, our friends, our family, your friends, your family. You know, keep us in mind for those reasons because you know, our businesses are about people. That's what really matters to us. And we're all small businesses in our world. So we love all the support, and we want to support you in return. Thank you so much for your time, and please subscribe to our channel. Do you have a channel? Do you have a YouTube?
I think I do. Yeah.
We're probably going to put that there too. All right, awesome.
Yes.
All right, thank you. You guys have a great day.
Bye, everyone.